As of today, Saturday, December 27th, 2025, the stock market is currently closed for the weekend. The last recorded trading session for Coupang Inc., trading under the ticker symbol CPNG on the New York Stock Exchange, concluded on Friday, December 26, 2025. At the final bell, Coupang stock was priced at 24.28 USD, marking a significant upward movement of plus 1.48 USD, or a plus 6.49% increase during the single session. While the broader indices like the S&P 500 showed a modest grind, Coupang outperformed the general market sentiment by a wide margin, showing a level of volatility and recovery that has caught the attention of traders who typically focus on high-volume movers like Tesla stock or Nvidia stock. The immediate insight that most retail investors missed during this Friday surge is that we weren't just seeing a random green day driven by a broad tech rally. Instead, the price action was a violent correction of a mispriced fear. Throughout the early weeks of December, Coupang had been under a dark cloud due to reports of a massive data breach involving 33 million customer accounts. The market narrative had shifted into a worst-case scenario where investors expected systemic regulatory fines and a permanent loss of consumer trust in South Korea. However, the reality that hit the tape on Friday was that the breach was not an external hack, but a contained internal incident involving a single former employee. The actual number of accounts with saved personal data was closer to 3,000, not 33 million. This massive gap between the expected catastrophe and the manageable reality created a short squeeze environment that propelled the stock back above its 50-day moving average. It's a classic example of why investors using a Fidelity trading platform or the Robinhood app need to look beyond the headlines to find the disconnect between price and value. The general belief about Coupang is that it has already peaked in its home market of South Korea. Many people think that because Coupang already serves the vast majority of the population with its rocket delivery service, there is very little room left for growth. They see it as a mature utility rather than a growth engine. However, the deeper look into the recent numbers suggests this common ground is actually shifting. While the customer base is indeed large, the frequency of spend per customer is still climbing. People aren't just buying electronics and clothes anymore. They're moving their entire grocery budget, their food delivery orders through Coupang Eats, and even their luxury shopping through the recently integrated Farfetch platform. If you're managing your own funds through self-investing or using investing sites to track performance, you have to realize that Coupang isn't just an e-commerce company. It is becoming the operating system for daily life in one of the most digitally connected nations on Earth. Looking at the recent daily swings, the trading volume on Friday spiked to over 30 million shares, which is nearly double the 30-day average. This level of institutional activity suggests that big money is stepping back in now that the cybersecurity overhang has been removed. We saw similar accumulation patterns earlier in the year when Fidelity Investments and other major institutional holders maintained their positions despite the volatility. The stock has spent much of 2025 bouncing between a 52-week low of 19.02 and a high of 34.07, and this recent bounce from the 22.00 level looks like a firm rejection of the bear's attempts to push it into the teens. For those using interactive brokers trading tools to analyze the tape, the order flow indicates that the selling pressure from SoftBank's Vision Fund, which has been a persistent headwind for years, is finally being absorbed by a more diverse group of global asset managers. In terms of sector momentum, the e-commerce space has been struggling with rising logistics costs and a consumer shift toward services. Yet Coupang has managed to expand its margins. In the third quarter of 2025, the company reported net revenues of $9.3 billion, an 18% increase year over year. Even more impressive was the gross profit, which hit $2.7 billion. This wasn't achieved by simple price hikes, but through the extreme efficiency of their automated fulfillment centers. They're now using artificial intelligence to predict exactly where a product needs to be located before a customer even clicks the buy button. This is the kind of operational depth you won't find in a standard press release. If you're looking for investment help or trying to invest online, comparing Coupang's logistics moat to competitors like Naver or Emart shows just how far ahead the Amazon of Korea really is. I want to pause here for a second and get your take on this. Comment below how many shares of Coupang you currently hold, or if you are waiting for it to dip back toward the $20 mark before entering. It's always interesting to see how the sentiment on Robinhood investments compares to the long-term holders on a Fidelity brokerage account. Now, let's look at the business model that supports these numbers. Coupang's core strength is its end-to-end integration. Unlike other marketplaces that rely on third-party couriers, Coupang owns the warehouses, the trucks, and the software. This allows them to offer dawn delivery, where a product ordered at midnight is on the doorstep by 7 a.m. This level of service has created a moat that is almost impossible for a new entrant to cross. They have also successfully launched a subscription model called WOW membership, which mirrors Amazon Prime but with a higher penetration rate relative to the population. This membership creates a sticky ecosystem where users are incentivized to use Coupang for everything to get the most value out of their monthly fee. The company is also looking beyond Korea. Their expansion into Taiwan has been a bright spot that many analysts underestimated. In 2025, Taiwan has become a major contributor to the developing offerings segment, which saw a 32% revenue increase in the latest report. They're essentially copy and pasting the Coupang playbook into a new market with similar population density. While they are still losing money in Taiwan on an EBITDA basis, the path to profitability is becoming clearer as they build out their local infrastructure. This is the part of the story that investors using SoFi Active Investing or Schwab Intelligent Portfolios should watch closely. If Taiwan proves that the Coupang model is exportable, the total addressable market for this company suddenly doubles or triples. However, it hasn't all been smooth sailing. The acquisition of Farfetch, the luxury fashion platform, remains a point of contention. Critics argue that Coupang is an expert in logistics and groceries, not high-end fashion. The integration has been expensive, and it has weighed on the consolidated net income, which came in at $95 million for the third quarter. That is a 48% increase from the previous year, but it still represents a very thin margin of roughly 1% on over $9 billion in revenue. The expectation was that Farfetch would provide an immediate boost to the average order value, but the reality is that the luxury market has been cooling globally. Coupang is betting that they can bring their operational discipline to the chaotic world of luxury fashion, but it's a high-stakes gamble that could either define their next decade or become a permanent drag on their balance sheet. For those of you managing an individual brokerage or looking at Fidelity mutual funds for exposure, it's important to understand the macroeconomic pressures at play. The South Korean won has been volatile against the US dollar, which can make Coupang's earnings look worse than they are when reported in USD. On a constant currency basis, their growth is actually even stronger than the headline numbers suggest. This is a nuance that often gets lost in the noise of a Robinhood stock trading notification. When you see a 16% growth rate, you have to ask yourself if that's the real operational growth or just a currency fluctuation. In Coupang's case, the operational growth is consistently outperforming the reported figures. Institutional ownership remains high, with over 83% of the stock held by large funds. This provides a certain level of stability as these players aren't usually swayed by the same daily FUD that drives the retail crowd on the Robinhood app. However, the presence of major insiders selling shares can still spook the market. Recently, the chief financial officer and other executives have been offloading some of their holdings. In a vacuum, this looks bad, but when you consider the stock is up significantly from its 2024 lows, it's often just a case of simple diversification. If you're using Interactive Brokers trading to track insider trades, you'll see that the volume of these sales is relatively small compared to the total shares outstanding. As we look toward the future, the catalysts for Coupang are clear. First, the potential for a massive earnings beat in the fourth quarter, driven by the holiday shopping season and the continued growth of the WOW membership. Second, any further clarification on the Farfetch integration that shows a path to break even for that segment. And third, the continued expansion into new service categories like travel and streaming video through Coupang Play. The risks, on the other hand, are largely regulatory. The South Korean government has been increasingly strict with big tech companies, and any new legislation that limits Coupang's ability to control its logistics or its workforce could hurt the bottom line. In summary, the story of Coupang in late 2025 is one of a company that is successfully navigating a transition from a local champion to a regional powerhouse. The relief rally showed us that the market is still very sensitive to negative news, but it also proved that there is a massive amount of buy the dip